Very good morning. Take us through what have you got for the Paathshala day today.
So today's topic is on mean reversion, and it's a very interesting concept because when stocks go into a corrective phase, like what we've seen over the last few days and last few weeks, where many sectors, many stocks, they get back into a corrective phase, there comes a point where these stocks come back into a mean reversion zone, where the risk reward starts to look a lot more attractive, and the stock goes back into its historical patterns. So what we are looking today is a very simple indicator of mean reversion, one part of the mean reversion, which is using 50-day moving averages as a classic mean reversion point. Now this red line which you can see is the 50 DMA for the stock price. In this case we've taken Oracle Finance OFSS as a stock. You look at the tendency of the stock coming very close towards its 50-day moving average and how it changes its stance or continues to move up higher depending on the size of uptrend the stock is going through. So at this point of time, for example, here you can see that the stock, after breaking past above the 50 DMA, goes into an uptrending mode. The stock retests its 50-day moving average, starts off moving up higher. So which means closer to this 50 DMA becomes a very strong buy on dips or a mean reversion zone for the stock. Even at current levels, when the stock breaks down below the 50-day moving average, this acts as a resistance point for the stock price, which means again, when the stock was into a downtrend, the stock reaffirms the fact that this 50-day moving average is acting as a mean reversion zone for itself. On the verge of a breakout, the stock confirms a breakout over here, and then after a series of uptrend, the stock again comes back towards the corrective phase, reverts back almost exactly at its 50-day moving average, moves up higher, again a retest towards the 50-day moving average, where the stock apparently has taken support and seems to be looking like the stock is stabilizing at current levels. So when you see time and again a stock reiterating a very simple kind of a behavior or a parameter, we expect that that's a behavior as or a good strategy for a mean reversion zone. We look at one more stock which on current charts is heading towards a very similar kind of a mean reversion point. This is HDFC Life. As you can see, again, when a stock confirms a breakout of this key moving average, after uptrend, the stock retests again, comes back towards its 50-day moving average and starts to move up higher. Again, the stock in the recent past, where from 760 approximately, corrected back towards its mean reversion point closer to 700 levels, spent some time over here consolidating, and now is getting ready for a breakout yet again. So this is a classical sign of how mean reversion shapes up and how this could be taken as a good strategy for traders who are looking at buy on dips.
All right, thank you so much for that, Kunal, for teaching us something new today in this edition of Paathshala, that is a mean reversion. On that note, viewers, we will slip into a break on this edition.